Welcome back to the FDIC Money Smart series module entitled To Your Credit. I'm John Hurley, the Financial Literacy Consultant for the Apache Junction Public Library. Now, in this segment, we'll provide you with an overview of what's in a credit report. Now, first off, a credit report is a record of how well you've paid your debts to your creditors. It lets lenders know who you are, how much debt you have, whether you've made your payments on time, and whether there's any negative information about you in public records. Now, we'll take a look at the agencies that maintain your credit report. There are three major credit reporting agencies. There's Equifax, Experian, and TransUnion. Now, these agencies receive information from creditors, usually monthly, about whether you're making your loan and credit card payments on time. They also collect information about you, perhaps, on bankruptcy filings, court-ordered judgments, tax liens, and other public record information from courthouse records. Now, the reports from each of these credit agencies may look different, but generally contain the same basic information. For instance, they could have information on you about identifying information, including your name, your Social Security number, current and previous addresses, your telephone number, your birth date, your current and previous employers, and if you're married, even your spouse's name. It could be a report containing your credit history. That includes account records with different creditors, and it'll show how much credit has been extended to you from each and how well you've repaid it. Remember, how well you manage even relatively small bills can significantly impact your credit report. Another section of your credit report could include inquiries. These are creditors and other authorized parties who have requested and received your credit report. It could report information about you in public records, including collection accounts, bankruptcies, foreclosures, tax liens, civil judgments, delinquent student loan payments, and late child support payments. Collection accounts include bills like medical bills or utility bills that are referred to a collection agency or even an attorney if you're sued or not. Now, unpaid bills that are not resolved may turn into public records, including a judgment. A judgment is a court-ordered lien for debt owed to a creditor. A judgment remains on your credit report for 7 years from the date it was filed. For example, if you owe money to a creditor, the creditor may try to recover the debt by garnishing your wages or seizing your money from your bank account or placing a judgment lien against your property that you own. A tax lien is a claim against property or assets filed by the taxing authority for the unpaid taxes. For example, if you do not pay your taxes, the taxing authority can make a claim against your home. The paid tax lien generally stays on your credit report for 7 years, but an unpaid tax lien may stay on your report until it's paid. Now, public records could also show information about a collection account which is a past due account that has been referred to a specialist to collect part or all of the debt. If you do not pay your bills after a certain period of time, a creditor may ask a collection agency to collect that amount that you owe. Public records also list bankruptcies. These are legal proceedings that release a person from paying debts. The two most relevant types of bankruptcies are Chapter 13 bankruptcy and Chapter 7 bankruptcy. You need to have regular income to qualify for a Chapter 13 bankruptcy. You can keep all or part of your property, but you must make regular payments on the debts even after filing for bankruptcy. Income restrictions apply when filing for Chapter 7 bankruptcy. You must give up certain property to the creditor. Yet, you may be able to keep certain amounts of your property that the law agrees is needed to support yourself and your dependents. It's very important that you understand that bankruptcy has a very negative impact on your credit. It should be your last resort because depending upon the type of bankruptcy, it'll remain on your credit report from 7 to 10 years. Having a bankruptcy on your credit report will make it very, very hard for you to get credit in the future. The possible impact of bankruptcy is so great that the law now requires you to receive credit counseling before even filing for bankruptcy. It will not contain checking and savings account balances. It doesn't have income or medical history information, and it won't contain purchase information either by check or cash, and it won't show business account information. It also doesn't contain any race, gender, religion, or national origin, and it won't show your driving record. This concludes the FDIC Money Smart Series module, What's in a Credit Report? I'm John Hurley, the Financial Literacy Consultant for the Apache Junction Public Library. Thank you for watching.